Welcome to our NFIB webinar, the Pennsylvania Department of Revenue Tax Briefing for Small Business. I'm Suzanne Stoltenberg, Communications Director with NFIB Pennsylvania. We're very thankful to our presenters from the Pennsylvania Department of Revenue. They're Meggan Swisher, who's Director of Individual Taxes, and Suzanne Leighton, Deputy Secretary of Compliance and Corrections. Now, some of our members did mail in questions in advance. Those answers have been incorporated into this program, but you can mail us here at NFIB Pennsylvania. Email us if you have further questions, and we will anonymously get them answered for you after the presentation. Okay, well, we start with Suzanne Leighton. If you could kick it off.
Thank you, Suzanne. Today we're going to cover a couple of topics. We're going to do a recap of the tax amnesty program that ran from April through June of 2017. We're going to give you an update on the legislation that was passed this past October. Meggan Swisher is going to talk about the Schedule C and Yui review, and we're going to give you an update on modernization. So, tax amnesty program ran from April to June of this past year. It raised $130 million for the general fund for the 2016-17 fiscal year. We were anticipating $100 million, so we exceeded our revenue estimate. During this program, participants were abated 100% of their penalty and 50% of the interest. So those that were eligible to participate in amnesty and did not, or those that were denied amnesty, were recently assessed a 5% penalty for failure to participate. 44,000 notices were issued last week to those. Those individuals do have the opportunity to appeal that 5% penalty. Taxpayers who have been denied amnesty will also receive a written notification, which they can appeal to the Board of Appeals. And approvals have gone out, or they will be going out shortly. Let's go over the legislation that we passed this fall. We assessed, there's marketplace sales, which requires notification by sellers, facilitators, and referrers to purchasers that they are subject to Pennsylvania sales and use tax. And there's also a requirement that they either collect the sales tax or give the notification, and they have to notify the department as well. 1099 miscellaneous non-resident withholding was passed. That's for those that pay Pennsylvania source income on services or for rents and royalties. And then the tax appeal period is the last thing I want to cover. It's just a quick change. It reduced the appeal period down to 60 days from 90 days. So you have 60 days from the date of the assessment to file an appeal with Board of Appeals. And if you're denied at the Board of Appeals, you have 60 days to appeal with Board of Finance and Revenue. We're going to go into a deeper dive with the 1099 miscellaneous withholding. This seems like a topic that would interest you. So Act 43 of 2017 created a withholding obligation for certain payers of Pennsylvania-sourced income and lessees of Pennsylvania real estate to non-residents. At the beginning of January of this year, anyone that participates in or conducts the following business activities is required to withhold from such payments the amount equal to the personal income tax rate, which is 3.07%.
And could I just clarify, this would be, for example, if you have a business and you're contracting with an out-of-state business person and you would have to withhold income tax and send it to the state of Pennsylvania at a certain threshold. Is that correct?
That is correct. It's if you're paying an individual to come into your state to provide services. And then, so if you're providing non-employee compensation or business income to the non-resident individual, for work performed in Pennsylvania, you have to do the Pennsylvania withholding. And then also, if you lease real estate from a non-resident individual, you must withhold Pennsylvania personal income tax.
Okay.
Okay. So what kinds of payments are subject? So the payments are considered non-employee compensation. Those are payments that are made to someone who is not your employee, and for services in the course of your trade or business. The lease payments include, but is not limited to, rents, royalties, bonus payments, damage rents, and other payments made pursuant to a lease. So please keep in mind it's for lessors, include only individuals, estates, and trusts. So if you're an individual leasing residential property, you rent an apartment, you're not required to withhold. Only businesses are required to withhold. So withholding is optional for payers and lessees paying less than $5,000 annually. However, if you are unsure of the total amount of payments that will be made during the year, we encourage you to withhold and remit income tax for all payments made.
Now, let me just ask, let's say you do that and you don't go over the $5,000, then you have to wait for the agency to send back that money, or how does that work?
No, since you withheld it from the individual, when the individual files their PA 40, they can still apply that to their tax liability. And if there's a refund due, it will go to the individual.
And it is not in the law that people need to withhold it under $5,000. You're just recommending that.
Correct. If you're unsure if you're going to go over, we recommend withholding, because once you hit 5,001, then you have a liability.
Okay, so you would hold that liability.
Yeah.
Okay.
Okay. So what are the responsibilities? So the payer or lessee must apply for a 1099 MISC withholding account by completing the PA 100 Pennsylvania Enterprise Registration Form, and that can be found electronically at www.pa100.state.pa.us. If you already have an employer withholding account and you do not want to report the 1099 MISC separately, you do not have to complete the new registration. However, if you want to report the 1099 MISC separately, you must register for a 1099 MISC withholding account. The withholding and remittance is on the same schedule as employer withholding. So if you withhold $5,000 or more per quarter, you would have to remit to the department semi-weekly. Between $1,000 and $5,000 per quarter, you would remit semi-monthly. And if you withhold between $300 and $999 per quarter, that would come in monthly. And then any withholding under $300 would be remitted quarterly to the department. So, Suzanne, did you want me to go into the whole e-filing of it all like we did last time?
Well, I don't know that you do. We are recording, but it did take effect, was it January 1? I would go over these questions because I think our people are really curious about this, especially if they have a business near the border of the state and they do a lot of business with outside contractors.
Okay. So before I get into the potential questions, I want to say for tax year 2018 and each calendar year thereafter, if the federal form miscellaneous is not completed with the state income and the state tax withheld information, it needs to be filed with the department with that information. So that would be boxes 16, 17, and 18. And we encourage those payments to be made to us electronically. It avoids keying errors, and it allows the individual to get credit immediately because we can find that in our system immediately. So some of the potential questions that we wanted to go over for this program. When does the new withholding requirement take effect? Just as we discussed, it starts January 1st of 2018. Anyone that pays Pennsylvania source non-employee compensation, business income, or rental payments to a non-resident individual or disregarded entity that has a non-resident owner is required to withhold taxes. Do you have to withhold, or is it a new requirement for companies that already have an employer withholding responsibility? The new withholding requirement is applicable to anyone when the conditions for withholding are met, regardless of whether you have employees in Pennsylvania or not.
So you might not even have sort of a payroll program to withhold other than just your sole proprietor, but you would have to arrange that.
Correct.
Okay.
If I don't have any payroll, do I have to set up a payroll account? So businesses that currently do not withhold Pennsylvania personal income tax from employee compensation, or businesses who desire to segregate 1099 MISC withholding from regular employer withholding, will have to register for a 1099 MISC withholding account using the PA 100. If I already have a payroll account, do I have to set up a 1099 MISC account? Businesses that currently withhold Pennsylvania personal income tax from employee compensation can use the same account to report, withhold, and remit the 1099 MISC withholdings. However, if the business wants to keep different amounts segregated, they need to register the 1099 MISC on the PA 100.
Okay.
If I don't know if I will pay someone more than $5,000, what if I don't know if I'll pay someone more than $5,000 during the year?
Right,
So
and we did go over that. You suggest that they go ahead and withhold, but by law, they really only have to do it over $5,000.
Correct.
Or
So,
they could be liable, which is why you recommend it.
Yes.
Okay.
Yes. So do I have to withhold for residents of reciprocal states? So reciprocity only applies to W-2 based employee compensation. So this is the income that the individual will report on line 1 of the PA 40. Pennsylvania source income that's being reported on the 1099 MISC is always taxable in Pennsylvania for personal income tax purposes. So you must withhold for those residents of reciprocal states as well. So that the 1099 MISC income is income that is reported on line 4 or line 6 of the PA 40. So what records do I need in order to determine if a payee or lessor is a non-resident? So payers or lessees will need to determine the information they will require. The department is not creating a form similar to the federal form W-9. However, the W-9 would give you the information as to whether the payee is an individual or a single member LLC, taxes on their individual income tax return, and you could get some information based on the mailing address on that.
Okay,
so right
that
now,
makes sense.
Yeah. So now I'm going to turn it over to Meggan Swisher to cover Schedule C and UE.
And just so as Megan's taking over here, this is an issue of great concern. We've gotten many calls from people who did get notices, and we're going to go over how that happened and what's being changed related to that. Meggan, great. Go right ahead.
Okay. Thank you. As you mentioned, I'm going to go through some of the questions that we received throughout the year in response to our reviews of the Schedule C. The majority of what I'm going to discuss is in regards to Schedule C. Schedule UE returns have been examined for at least 3 years now, but this is basically kind of lumped in both of the issues into one. So the first question is, why are Schedule C's and Schedule UEs being examined? The schedules are being examined as they represent areas where noncompliance and tax laws can potentially be occurring. Due to the recent availability of analytical tools, the department has been able to expand our review of Schedule C and Schedule UE. So basically, the department has been able to obtain software that allows us to do more finite review of Schedule C and Schedule UE filers. Included in the slide is actually the tax reform code section that outlines the department's requirements actually to review tax returns, and that part of this review is us fulfilling our mandate to ensure compliance.
Okay.
How many Schedule C and UE are being examined? The department receives roughly 6 million personal income tax returns per year. 540,000 of the returns that we received in 2016 were actually filed with the Schedule C attached, and about 46,000 of those returns were actually selected for review by the department. In addition,
I did have a question from a member who asked, what was the criteria used? And I thought perhaps you used a percentage of what would be normal, or can you just give us one line on that? When would they get a notice? What made them an outlier?
The outlier was based on an average expense that is claimed for a particular industry. So, for instance, based on the NAICS code that person would put on their Schedule C, say they are let me think of a business, a mini market.
Okay.
And we looked at every Schedule C filer that listed their business as a mini market, and we took an average expense amount for each line on that Schedule C. If they were above that average expense amount, that's how a return was selected for review.
Okay, so that was a certain amount, but it might have been so many percentage points above that made it an outlier, not just a little bit above.
Correct. Correct.
Okay.
Going back to the numbers that we reviewed, the department received, of the 6 million returns we received, over 1 million returns were filed with the Schedule UE, and of those returns, approximately 58,000 were selected for review by the department. So we just wanted to outline that it was a small percentage of the overall filing population that was actually reviewed. And those were just the ones we reviewed. Of those, there was a small percentage as well that actually received notices.
Okay.
So the next
you don't happen to know how many got notices, because we did get quite a few calls, do you?
It was, for Schedule C specifically, I believe it was roughly around 30,000.
Okay.
The next question was, how are we selecting Schedule C and UE to be reviewed, which we basically just discussed briefly. We use our data analytical tools to come up with average expense amounts for that particular industry, and anything above that is how it's selected for review. And the same holds true for the Schedule UE. A particular type of unreimbursed business expense that's above the average expense for that same job classification could get selected for review. The next question that we heard a lot, and this was actually due to the notices that the department issued, was, does the department really want individual invoices? The department will accept general ledgers, schedules, summaries, logs, canceled checks, bank statements, and or credit card statements, etc., that tie back to the line item that we are questioning. All of the information that we are requesting is information that we believe would have been necessary to prepare the tax return. And even though we're allowing at this point the summaries to come in, we are reminding everyone that we do reserve the right to request the detailed receipts if we determine that it's necessary.
And so, just out of curiosity, if this is like a massive amount of information for some businesses, they're not formally being audited. This is a notification, but they do have to provide and take all the time to pull together all that paperwork and get it to you?
That is correct. This is not a formal audit. It is what we consider a correspondence review. So we are, again, we have clarified our position on it, and we will take the summary information. So if they have spreadsheets or if they have anything from their software that provides summary items, they don't have to provide us the details unless we determine that the summary item doesn't give us enough information to justify the expense.
Thanks. Okay.
As I mentioned, we clarified our position this year, but we actually didn't update our notices to make it clear that we will accept the summary items. Those notices will be updated for the upcoming year, though.
That tells you what you need to provide, in other words.
Correct. That clarifies that we will accept summary items, but again, knowing that we might request the detailed items after we've reviewed the summaries. The next slide is basically addressing why it was taking the department so long to review the information. During the tax season, the average response time was approximately 3 months from the time the response was received from the taxpayer, and we do work the responses first in, first out. Responses that are received electronically are posted to our system much more quickly, so we are encouraging everyone to either fax that information or send it via email. Why does the department indicate that it did not receive my information when it has been submitted? Second notices were an area where the department had heard taxpayer and practitioner concerns. Originally what was happening is we would send the first notice, and because of the time frame that it was taking us to post the information received to our system, a second notice was being issued. We did, and that's an automated second notice. The department did lengthen the time frame between the first and second notices to 90 days, from 60 days to 90 days.
Yeah, that was a big complaint, but you've altered it to be a little bit longer now. So hopefully they won't get it when they've already complied.
Correct. So to go through some of the things that we did do this tax season to address the concerns that were raised, we did develop 2 documents that are called Tips for Successfully Filing PA Schedule C and Tips for Successfully Filing PA Schedule UE. Both those documents are now available on the department's website. Both those documents provide the expectations that the department would have when reviewing tax returns and correspondence that they could receive from us, as well as it provides various ways to correspond with the department, including the email addresses and fax numbers. We did extend the deadline for taxpayers to provide us with the additional information we requested. Originally, the letters provided taxpayers 15 days to respond. We extended that to 30 days, and that notice was changed. We also extended the time period, as I mentioned, between the first and second notices an additional 30 days. So originally it was 60 days before a notice would go out. Now it is 90 days. We've ensured that the department has sent notices when we process the return as filed after we reviewed the correspondence. In addition, we did consistently reevaluate the criteria throughout the year for returns that were being reviewed by the department, and we did make adjustments. Just to give everybody an update, the department is beginning a multi-year modernization of our individual taxes as well as motor fuel taxes processing systems. Those tax types that are part of this new modernization initiative are the International Fuel Tax Agreement, or IFTA, motor fuel and liquid fuel taxes, inheritance tax, realty transfer tax, personal income tax, our pass-through entity processing, as well as the property tax and rent rebate program. As we get further down the line in this modernization project, we will be sharing additional information. Now I'll turn it back to Sue to go through Marketplace.
I'm going to move into Marketplace sales. It was legislation that was recently passed by the legislature. Who does this affect? It affects Marketplace facilitators, sellers, remote sellers, and referrers who have annual sales of $10,000 or more. So the law defines the terms shown here. I'm going to give you the terms of the marketplace of these terms here, and so generally a marketplace facilitator contracts with marketplace sellers to list or advertise sales of the seller's goods and services through a
are we on the right slide there, or do you want to go back one?
I think I want to go back. Thank you, Suzanne.
No problem. I just was trying to follow along.
Okay. Yeah, for some reason I have this slide in twice. Okay. So let's go over the terms for the marketplace sales legislation that was passed. So generally, a marketplace facilitator contracts with marketplace sellers to list or advertise sales of the seller's goods and services through a marketplace. So the facilitator directly or indirectly collects the payment from the purchaser and transmits the payment to the marketplace seller. A marketplace seller that has a contract with a marketplace facilitator for which the facilitator agrees to advertise the seller's goods and services collects payment from customers and remit payment back to the seller. So a marketplace seller can be a Pennsylvania-based company with sales tax nexus or a remote seller. So if the marketplace seller has nexus within Pennsylvania, they're already required to be registered for sales and use tax. A remote seller is a seller that does not maintain a place of business in Pennsylvania, but makes retail sales directly to individuals and businesses in Pennsylvania. And then generally, a referrer receives a commission, fee, or other consideration from a seller for listing or advertising the seller's goods or services and transferring purchasers to the seller. So unlike marketplace facilitators, remote sellers, and marketplace sellers, a referrer does not collect payment from the purchaser. Referrers do not include persons or business entities printing or publishing newspapers or providing internet advertising services that do not provide the seller's shipping terms or whether the seller charges sales tax.
So you have an example you could give people of what a referrer would be, any kind of anecdote?
Yes. So I heard a story on the radio a couple weeks ago about an individual who reviews mattresses, and he earns probably $100,000 a year in commissions just by reviewing mattresses. So he will write a blog reviewing what a mattress is, and if I read his blog and I click on the link and buy the mattress, he receives a percentage of the sale. So he's known as a referrer because he gets a commission from the seller for the purchase of it.
Okay, and would this apply to referrers anywhere in the country or just if they live within Pennsylvania?
So it actually it would be any referrer, regardless of where they live, if the sales are more than $10,000 in Pennsylvania.
Got it.
So if you meet any of those definitions, you have two options. Option 1 is if the marketplace facilitator, remote seller, or referrer elects to collect and remit the sales tax, then they're required to register for the sales tax license. And that can be obtained by filling out the PA 100. So sales tax collected by a marketplace facilitator must be remitted directly to the department. They may not give the collected sales tax to the marketplace sellers. So before this legislation was passed, some facilitators would offer to collect the tax on behalf of the sellers, but then they would give the tax to the sellers for them to remit to the state. In this instance, the facilitator must now directly remit it to Pennsylvania.
Okay.
So the other option is if you don't want to collect and remit the sales tax, you have to comply with our use tax notice and reporting requirements. So this election has to be made on or before March 1st of 2018, and it will be effective April 1st, 2018. So this initial election will be good through June 30th, 2019, and then for subsequent years, the election must be made by June 1st to take effect July 1st. So it has to be elected every year. And this election will be made by using the department's annual marketplace sellers election form. But this will not register you for sales and use tax. So there are several notice requirements, and I think the one that might affect our listeners here, because they obviously probably have nexus in Pennsylvania, is for the referrer. So a referrer has to, let me get to that. The referrers must provide written notification to the remote sellers who had a PA individual or business entity referred to them by the referrer that Pennsylvania use tax may be due on purchases made by Pennsylvania individuals and businesses. The purchaser is required to remit use tax on their taxable purchases directly to the Commonwealth. A remote seller may be required to make an election to either collect or remit Pennsylvania sales tax or to comply with noticing requirements. And then they have to give them instructions for obtaining additional information about sales and use tax from the department. So that's what they have to give to the remote seller. So they also have to provide notification on their website to the purchasers that Pennsylvania sales tax may be due in connection with the purchaser delivery. And then there's several lines of what they have to put on their website about what tax is due. And this is all available on our website if you want to see the detail of what is required. But
I was going to say that's rather complex. They'll certainly have to go there and look at every detail to figure it out.
Right. So I just want to bring it to our listeners' attention that they could be considered a referrer, and if they are, they have to provide notification to the sellers about Pennsylvania sales and use tax. They have to put something on their website for the purchasers to be able to see about Pennsylvania sales and use tax. And then at the end of the year, they have to provide a list to the department of all the remote sellers that they received referrals from.
Okay.
Okay. And I think I just covered that. So the annual reports that would be due to us.
All right.
So there are penalties for failure to file or fail to comply with the notice. So it's a pretty substantial penalty. It would be $20,000 or 20% of total sales in Pennsylvania during the previous 12 months.
Right, that is a fair amount of money, so they better get on your webpage and read about it.
Yes. Yeah, and it is pretty complex, and we try to address each situation separately. So if you're a referrer, there's a section just for referrers, so you can go to the section where you need to.
And if they need assistance, they can speak with a human being over there to get clarification, or because I know even some of the tax professionals may not be totally on top of this.
Yes. There's, I would probably recommend, we'll let them contact you, Suzanne, first, and I can forward the email to the individuals, because I'm not exactly sure which bureau the questions will be coming into.
All righty.
Okay. And I know you also wanted me to cover the bonus depreciation.
Yes, I don't know if you can go forward to that question slide because I do have a question as well. And okay, let me. You go ahead and cover the item you were going to talk about, and then I want to ask you another question about how people can get more information on something.
Okay, so the federal statute that was just passed in December increased bonus depreciation to 100% of bonus depreciation.
Now we're talking just about C Corps here, right?
So this will only affect C corporations. So for S corporations, partnerships, and individuals reporting on a Schedule C, they fall under Pennsylvania personal income tax statute. And for Pennsylvania PIT, we never followed bonus depreciation. However, because the depreciable basis was different for federal and PA, we required those assets to be depreciated straight line for Pennsylvania PIT. However, the statute for bonus depreciation under the corporate tax statute for C Corps actually decoupled from the federal statute, and it requires an add back of the bonus depreciation that was deducted on the federal return, and then the remaining basis was allowed to be depreciated 3/7 for the remainder of the asset. So the way the statute is written, it requires an add back, and then the part of the asset that wasn't taken bonus, a deduction was allowed. So now that now that it's 100% bonus depreciation for federal, we would require an add back of 100% of the depreciation in calculating Pennsylvania corporate net income tax. However, there's no remaining undepreciated amount to take the 3/7 on, so you cannot take the depreciation for the remainder life of that asset, and it can only be taken in the year of disposal.
Okay, so just a quick, brief summary. As I understand it, because of the federal tax reform law that was signed into law, Pennsylvania would be losing quite a bit of income by staying with a similar policy, and therefore the rules have been altered, and C Corps or their accountants have to check to see what the new rules are. They've changed, and they are different, and you'll have to look on the department website to get that advisory.
Correct.
Okay, now I do have another question. Originally, we were talking about if you hire a business or a subcontractor or any kind of a contractor who lives out of Pennsylvania, you would have to begin withholding if you're going to pay that person over $5,000. And that's individual per contractor. Am I correct about that?
Yes.
Okay. So my question is, where can people get more information on that? Because I have heard from some of our businesses, like, for example, that are near the Ohio line, oh my gosh, this is very complicated. We have so many of those types of businesses that we deal with. Where would information on that be for them to understand it better and comply?
So we're currently working on frequently asked questions, and that should be posted to the website shortly. We have been receiving questions, and we've been working through trying to address all the questions that we've received in various areas of the department. So it's all gone down to one person who's collecting all the questions and working on the answers, and that should be posted shortly.
Okay, great.
We did post an information notice out on the website that can be found on our homepage that might give additional details as well that they could use.
Okay, well, I do want to thank both of you. Unless you have anything else to discuss, have we missed anything? It's quite a bit of information.
Yes.
Oh, okay. Well, Meggan Swisher and also Suzanne Leighton, thank you so much. I would like to let our members know that on February 20th, we'll be having another webinar. We'll be briefing you on Governor Wolf's budget presentation, what he wants to see in the upcoming budget, and our legislative director, Rebecca Euler, will be conducting that, and you'll be getting messaging about it. Well, ladies, thank you so very much. I greatly appreciate it, and I'm going to ask anyone with further questions to please email me here at NFIB, and I shall be in touch with you with some of their questions, and we will keep that anonymous. I'll just ask on your behalf. Thank you, ladies, and I appreciate it.
Thank you.
Bye-bye.